interest rates are too high to service our debts. That is the everything code thesis in a fucking nutshell.
Why you think 1010 has had such a long-lasting effect on the markets?
My guess is the exchanges. It's an amazing chart of NASDAQ versus global liquidity. I mean, it's 1 for 1. For asset prices, if liquidity is increasing, they all go up. By the end of Feb, we should be significantly higher. If you were to close the gap versus liquidity, Bitcoin should be sort of 140,000.
140,000. Final last technology ever developed by man, which is AI.
You're going to put double the intelligence of any human that's ever lived into a robot? Fuck no.
Do you think that alts still have chance this year?
Whether it's Solana, whether it's Sui, whether it's Avalanche, we could probably see them having VC.
GM everyone, and welcome back to another podcast episode here on the Coin Bureau. Now, today our guest, I'm sure, probably needs no introduction. It is, of course, Raoul Pal, the CEO and founder of Real Vision. He's also an ex-Goldman trader, a global macro investor, and all-round thought leader. So, Raoul, welcome, sir.
Good to see you, Nick.
Great to have you here, man. We've got a lot to discuss. Before we dive in, guys, quick few disclaimers. Nothing in this episode is financial or investment advice. Please consult the disclaimer in the description for more information and consult your financial advisor before making investment decisions. Now, Raoul, if I wind back to December of last year, and we were chatting on the stage at Binance Blockchain Week, and you were much more optimistic than me about the prospects for crypto this year. And you mentioned the change in liquidity dynamics in Q1 of this year. Indeed, that's one of your main theses. So I'm just curious, how are you seeing that right now? We've had 1 month into Q1. Are you still bullish now on Q1? And when do you think we could see those liquidity dynamics reasonably shifting?
So, yes, I'm still very bullish on Q1. And it's going to be a big test of my hypothesis that the liquidity conditions are coming over this Q1 period. But, you know, we've seen the changes to the bank regulations, the ESLR, which means that the Treasury can directly monetize debt by selling it to the banks. That increases liquidity in the overall system. We've got a potential partial shutdown of the government still to get out of the way. So we've got that. But so they haven't been drawing down the TGA, the Treasury General Account. But that's likely to start happening as well. We're likely to start to see signals about the change of who's going to be the Fed chairman. And, you know, if you see Rick Reeder, he's talking about interest rates are 100 basis points too high. You know, so we've got a lot of liquidity conditions along with fiscal stimulus all coming in Q1. Because don't forget, the game here is for the Republicans to win the midterms. And they're going to try and juice the economy as much as possible. So we should see the ISM, the business cycle, starting to rise as well. So from everything I look at, it suggests that liquidity is coming into the system. The main liquidity source currently is the Chinese. So they've been using their balance sheet. Liquidity is starting to expand. The weaker dollar is one of the biggest indicators of liquidity as well. So for me, it's all here. It's just a matter of waiting for a catalyst of which to take this all off. Because I think the market is currently trading at a discount to liquidity conditions and at a reasonably significant discount. So, you know, if you were to close the gap versus liquidity, Bitcoin should be where we are today. We're around 90,000 as ever, doesn't move. It should be sort of 140,000. So there is a reasonable difference. Yeah.
Okay.
So there's a reasonable difference and some alligator jaws to close.
Yeah, so I just want to point to a few of those that you've indicators and data that you pointed out there. So firstly, as it relates to the ISM, I see this is a big underpins a lot of your thesis that it needs to turn. And indeed, the past 2 months, I think, with readings, we've had down months in terms of the ISM indicator. We've got, I think, the reading coming out in the earliest of February, so next week or sometime. But what makes you think that it's going to turn up again and go above 50? Because, I mean, I don't know, we just saw consumer confidence numbers came out today. They were really, really bad. And I think there's just all these questions around the K-shaped economy and how this impacts on manufacturers. So I'm just curious in terms of what you're looking at as an indicator that this should be turning up.
So we use financial conditions, which leads by 9 months, ISM. Then 3 months behind that is global liquidity. And eventually you get to ISM. So we use probably, I don't know, several hundred forward-looking forecasting indicators for ISM. And they're all suggesting ISM comes strong this year. Then we can double check that against what Scott Bessent's saying. And Scott Bessent is saying, we really need to stimulate Main Street, not Wall Street. And stimulating Main Street is about bringing lending back and confidence back. So fiscal stimulus helps. It gives people more money to spend. They've got huge kind of tax depreciations on fixed asset investment. Remember, we've got this massive capex boom to come. We're going to be building data centers and power generation across the United States. So that's going to generate jobs. They're going to try and get mortgage rates lower, which generates more free income for people to invest, take risk, do these things. These tend to increase the ISM survey. Additionally, the changes to the ESLR means that banks are free to lend more, so they can use more leverage on their government bonds. So that lending has been restricted really to Main Street companies. It's not been easy to borrow money. So that allows for the free flowing of money. So you've got a number of factors that all suggest that the business cycle should pick up. And again, Scott Bessent's telling you they want to close the gap of the K-shaped economy. What is the K-shaped economy? It's markets versus the ISM. And what we've seen is technology and even crypto, if you take it back, have outperformed while the economy has been extraordinarily flat. So they're going to win an election. Don't forget, the Trump base is middle America, the disenfranchised middle American. And if they want to get voted back in, they're going to have to prove they've done something. So I think it's all set up for this to be very strong for the ISM.
Okay. Yeah, good. So as many of these indicators you're looking at in terms of they lead to the ISM increase and post them showing signs. Proprietary indicators that you guys track, right?
Yeah, exactly.
Okay, got it. Now that's just on that's the liquidity side potentially that you talked about, the ESLR and many of the other things the Fed's working on and the TGA. Okay, so obviously liquidity dynamics, you say they're potentially shifting. You think we could see, in terms of your thesis, potentially in February, March, the tail end of Q1, that we could start seeing this manifest itself in the markets. And what are you looking at? Are you looking at asset prices specifically? Because I mean, we can get into the discussion of Bitcoin itself and crypto, which seems to have been lagging a lot of the other assets, but stocks are at all-time highs, metals are at all-time highs. First of all, like what indicators you're looking at in terms of your thesis that it's starting to come true in the rest of Q1?
Without giving away too much stuff, I probably got, it's an amazing chart of NASDAQ versus global liquidity. I mean, it's 1 for 1. It's 1 for 1. And it shows where global liquidity is going because it leads. So for asset prices, if liquidity is increasing, they all go up.
So in theory, it's working for other asset classes. It's just not for crypto, which, is kind of very frustrating, which now brings us into the other point, which is what's happening to crypto specifically. And we can start with Bitcoin. And I think many will point to 1010. And you've got a lot of theories about this as well, in terms of like the exchanges having to sell out of potential inventory post liquidation events. First of all, can you quickly expand on that very shortly in terms of like why you think 1010 has had such a long lasting effect on the markets?
So if you think of what happened in the equity flash crash in 2014, we saw something very similar, right? Big multi-billion-dollar companies down 80% in a minute, 3 minutes. A lot of those trades got cancelled by the exchange because there's regulatory bodies, there's all sorts of... In crypto, we don't have that. So what happened was the liquidation cascade starts, there's forced deleveraging, but then the Binance API went down for the market makers. That couldn't have been a worst possible outcome. Now, let's assume it just happened because everything was breaking at the time. No market maker was able to bid in these liquidation cascades. So they became much more exacerbated. So who then bought, because we couldn't as retail get onto the platforms either. We were pretty much shut out of everything. There was this whole discrepancy between Coinbase and Binance. So who stepped in to provide the liquidity? Sure, the market makers came back. They got some, but we know they got slightly impaired because everything shut down. They couldn't trade. And my guess is the exchanges, because it happened on a few Asian exchanges as well, probably had to use their balance sheet to step in to provide liquidity. Because if they hadn't, it would have broken everything. Everything would have kind of gone to zero. So it would make sense to me that occurred. And nothing nefarious. It's like, what the fuck do? We need to do something about this. We need to provide liquidity. So you use your balance sheet and you buy whatever's being liquidated. So then you've bought a whole bunch of altcoins, Bitcoin, everything. I don't know how much, let's say the number's 10 billion. Who the hell knows, right? Now you need to get rid of that off your inventory because you can't hold it on your balance sheet. They're not a hedge fund. So then you've got to work it out. So how do you work it out? Well, you kind of do it like you did in program trading and equities, is you work it over time, which would explain why we got these weird, as soon as the US opened, 10 o'clock, the most liquid time of all of crypto, the slam. Because somebody uses an algorithm, what's the most liquidity? That's that time of day. How much do we need to get out of? Let's say it's, X, 200 million a day, whatever the number is, and you get the slam. And that had the footprint of that. We didn't see any other evidence on chain of others doing stuff. So it kind of made sense to me. And I think that created the liquidity gap the other markets didn't show.
Yeah, it sounds like the most reasonable theory. I mean, especially if you look at how prices have reacted since, and they just struggle to catch any sorts of bids. And the moment you get any sort of rally, you always get these sell-offs.
And we've also got the other issue is there's a huge amount of call selling by long-term holders. And all of these Bitcoin yield products, they're all based on call selling, really. There's some lending, some call selling. MicroStrategies cause a lot of call selling. So you've got that natural dampening of the market of people kind of extracting a bit of yield out of their long-term holdings. I think most of us would assume that is around the 100,000 strike, that people have been doing that. And we kind of need to clear that out of the way so there's less delta hedging when it happens.
Yeah. And on top of that, we've also got a lot of the OG selling distributed into the market, like largest amount last year than any time in history. I'm curious then, in terms of like how much longer do you think this can go on for?
So right? I honestly think by the end of Feb, we should be significantly higher.
Is that based on because you think that there isn't a certain amount of inventory that once it's cleared, that's
no,
it?
Because the forward-looking elements of liquidity are accelerating. And so therefore price should follow liquidity.
I get it in terms of the demand side of it. Yeah, but I'm just curious in terms of this supply side that just seems to need to dump because they've got the stuff on their books. Do you have any sense of that, much longer this can go on for? I mean, how bad is it really? How big are the bodies and how many market makers were impaired?
We haven't. I'm looking at the hourly chart because you can see it. We've only had one or two of these this year, but we were having it every single day before. So I think it's gone. I think it's gone for now. But people are still licking their wounds. There's less capital in the market. And, gold and silver had a big run. Tech stocks have had a big run. So speculative capital moves for the place with the fastest rate of return. And so speculative capital hasn't come back in here yet. And that kind of makes sense to me. It just takes a while to repair. I looked at the bear market lows in 2022 after that final leg down. Again, remarkably similar to now. It takes a digestion period, and that digestion period's not a few days. It's basically, a couple of months or longer. And I think we're just doing that.
What do you think this means for the future in terms of offshore exchanges? Do you think it shows the need for some sort of a regulation? How do you think the industry is going to change going forward? Because I'm sure you've seen a lot of, there is a lot of hate in the timeline, and there's a lot of concerns about this, and people pointing fingers. How do you think the industry evolves from this event?
I don't think anybody wanted that event. On crypto Twitter, everybody wants to go to some nefarious actors. I would put it the other way around. They probably didn't want this to happen, and they had to do something. If indeed that is what happened, regulation. Well, we're still waiting for the stability app, the market structure. We still don't have this in place, so we're still a bit in the Wild West. And all global exchanges, if they want to operate within the United States or in Europe, will end up with having some forms of regulations. So I think over time they get more regulated, and that's fine. But there will also be these small ones that are unregulated. Crypto is still the Wild West. It's a decentralized, financial market of which, who knows what can happen.
I think it further shows the need for the rise of perp dexes and decentralized exchanges.
Yes, but they can still have issues where things go wrong, right? You can have just because you think it's all run by a smart contract doesn't mean things can't go wrong.
I guess this question, I suppose if it's open source, people could have spotted
the other thing that happens to dexes. They get hacked. So if you don't want governments involved, then you're going to have to accept that this is riskier from a number of angles.
That's true. Yeah, exactly. I'm curious, coming back to another part of a bit of FUD that's hit the markets recently, the past few months. I recently did a podcast with Charles Edwards from Capriol Investments. I don't know if you know him, if you've spoken to him. but he has a theory that the real softness in Bitcoin wasn't 10-10, but quantum risk. Now, I don't personally necessarily believe that, but the quantum risk is something that's now been talked about a lot. And I don't know if it's something you've looked into or done any research on, but do you think this quantum computing and the risk of encryption being cracked is really a concern, especially how quickly AI is evolving? I'm curious if it's something you've looked into or thought about.
So let's say today China has a quantum computer. What do they do with that? Where's the highest prize? Is it to hack Bitcoin and everybody sees immediately that there's been a quantum hack of Bitcoin and Bitcoin goes to zero? None of the money, they won't make any money from it because the prices would fall immediately. Where's the biggest prize? Well, it's the US defense system, the European defense system, Google, Facebook. I mean, the entire system is based on that SHA-256 encryption. We're going to have to change all of these things. So if quantum was the risk, then Google's share price will be falling. The US government would be in blind panic. So I don't believe that to be the case. But do we take it seriously? We need to. Ethereum's moving that way, Sui's moving that way, I'm sure Solana are, and finally the Bitcoin devs are starting to wake up and realize that you're going to have to do something. But Bitcoin is always slow to move, takes a lot of debate. But we don't want to lose all the old tokens because it's not the new wallets that matter, it's the old ones where you've got the quantum problem. So I think game theory would suggest crypto's the last place that they'd start because there's not going to be some guy in his garage. It has to be a nation state, really, or a giant tech company to have a quantum computer that's able to do this. And where would they put it first? Because if not, you make the announcement to the world, we've got quantum computing. And you would attack Bitcoin first? No, you'd attack all of the defense, all of the everything else, and then you might try and scoop a bit of Bitcoin if you can before it goes to zero.
I mean, I think the theory is, look, in terms of the quantum cracking, for example, it's a lot of the banking encryption, military encryption, it's easily upgradable, RSA, and it's actually easier to crack a ECC or electric curb cryptography than RSA on these things. So and then the question is, okay, well, upgrading banking systems and all the protocols they require in terms of other encryption is easier than having to coordinate a decentralized network like Bitcoin, where you've got so many different
competing forces. I don't think so. I think a network is more adaptive than the financial system. The financial system is fragmented, complicated, out of date. To try and coordinate every bank of every major country to entirely change the encryption systems, I think is near impossible. Well, it's not impossible, but it just takes a lot longer than really getting a bunch of people. We're seeing with Ethereum now, they're now starting to work on the quantum proofing. It'll be a much faster process than the banks could do. The banks would be years to do this. I mean, it took them long enough with Y2K, and that was much less of a risk.
That's fair, yeah. Going back to one more piece of another concern potentially for this year for Bitcoin specifically is the debt risk. I think that there's quite a few people that are worried about, look, are they going to continue selling if they can potentially become a forced seller? Saylor's been buying ridiculous amounts of Bitcoin with strategy, and it still hasn't really moved the needle that much. So I'm curious in terms of, and also the fact that I think last year was the first time that Saylor has actually started stacking fiat to meet the preferreds, pay for the preferreds. Do you think that debt risk is an issue, and how do you think the debt market plays out over the next few months?
I think the debt market is probably cheap if you think crypto's going up. I think we've passed the first round of risks. We saw some people selling out of tokens, buying back their shares. I think in a full bear market, we might see more, but I also think we will see kind of corporate raiders buying the DATs, stripping the assets, if they're trading at a discount. I'm less worried than I was about the DATs overall. I think Michael Saylor's cleaned up his balance sheet as well by raising the fiat to take that risk off, using the new share structure that he's built. I think that helps. Many of these will just wither on the vine. They just won't do anything. And they'll trade at discounts to NAV until the discount's big enough to break up the company. That's kind of how it feels like to me. And we've seen these with closed-end funds. Other ones, like Tom Lee is doing, and others are actually trying to build value. He's got the VC part of his and public market investing part of his portfolio. That gives some convexity to the upside. So it's not just looking like an ETF. that trades at a premium and you take some cash out and stick it into the underlying. I think we'll see more of that. I think we'll see more operating company DATs that are trying to be ecosystem building the ecosystem out. So whether it's Solana, whether it's Sui, whether it's Avalanche, whether any of these ones that've got DATs, we could probably see them having VC, providing liquidity for lending, doing all things to grow the ecosystem, and that will grow the NAV per share.
Got it. And there's also the question around whether the MSCI is going to exclude DATs. I mean, there was that FUD at the beginning of the year. Thankfully, say the strategy has still been included. Do you think that this is that the MSCI indexes are like unfairly targeting DATs, or do you think they have a right to be concerned about it?
I think it depends. If they look too much like a closed-end funds, they're not really part of MSCI. If they look like a company that can grow its earnings and stuff like that, at the simplest level for me, then they should be included. So it really depends what they do and how they operate, I think. So I think, some caution in it. I get it, because equity investors, MSCI want, companies with earnings doing different stuff. And if you're just a holdco that holds one asset, you look more like a ETF or a trust. And last time I checked, the SPY ETF is not in MSCI.
So moving on to some other asset classes now, in terms of what's really been irking a lot in the crypto community, much to the chagrin of Mr. Peter Schiff, is gold, of course, and metals more broadly. It's just been completely crushing it. So I guess my first question is, have you got a thesis on metals? Do you hold any metals in your portfolio or a fund's portfolio? That's the first question. The second question is, do you eventually see a rotation from metals into Bitcoin and crypto?
So there's something called what we call the everything code dominoes. It's what drives what assets and when, and it's all phasing. So gold, financial conditions leads everything by about 9 months. Gold perfectly reflects financial conditions, as does dollar yen, as does silver. They're all in financial conditions land, so it's in the future. So they lead Bitcoin. And you can put the chart against it very nicely, and there's a very clear lead lag between gold and Bitcoin, because Bitcoin lives in somewhere around liquidity, global liquidity. Global liquidity leads it a bit by 3 months. So what you've got is a phasing. So when we talk about a rotation, it happens naturally. Like we're now seeing as the business cycle picks up, what happens when the business cycle picks up? Commodities go up. What's happening right now? Commodities are signaling the business cycle is going to go up. That phasing is always prevalent in markets. It's always there. So when I see gold doing what it's doing, it's telling you financial conditions are easing massively. The biggest driver of financial conditions is the US dollar. The US dollar got absolutely murdered the last few days. We still expect it to go lower. That increases financial conditions. It tells us the length of the cycle, because it lives 9 months further ahead than here. So it's like, well, the liquidity cycle can continue towards the end of next year now, September of next year. So everything seems to be playing out as it should be playing out. I don't know if you remember in 2020, over the pandemic, gold went first. I remember because I was buying gold and then ended up just switching everything into Bitcoin, because Bitcoin becomes an outperforming asset, because, gold can do a couple of 100%, crypto can do 5, 10x if you're lucky. So again, it's the patience thing. It's right. You've got the financial conditions that are showing us that liquidity is going to pick up. We've got gold confirming that. And now we're just waiting for crypto to do it. And we've seen NASDAQ following liquidity all the way perfectly. So I don't think there's anything wrong. I think we had a temporary aberration because of what happened in 1010 in crypto, and that will clear out the way, and we'll have forgotten all about it in 6 months' time.
Okay. But just in terms of what's actually driving metals right now and gold specifically, I mean, firstly, do you, like I said, do you have any exposure to gold? Would you invest in it? Do you think it's looking toppy? Do you have a thesis on where gold could continue going if these conditions still continue improving in terms of liquidity?
I think gold can still go further. I don't think it's clearly overdone, but I think it can go further. Can it go sideways for a month or two, ease off a bit of the overbought, because the RSI is like 97 or something stupid. But I still think it goes further, because I think the dollar goes lower. And I think financial conditions have to be very easy to deal with the debt rollover and the interest payments on the debt. And gold follows that chart perfectly as well. Again, there's a whole kind of flow of how this all fits. So yes, I think it goes further. Silver, don't know, possibly. But, we're obviously wildly overbought now. generally speaking, it should go on a little bit longer. Whether it's another 2 or 3 months, don't know. So I'm not really one calling a gold top. Would I buy it here? No. The risk reward is not good enough to buy.
Just coming back to the idea of the rotation potentially moving down and Bitcoin following gold. I'm curious though, in terms of, and you've mentioned previous episodes where gold has run first and then Bitcoin followed. Right now, there's many things that are driving the gold trade, but one of them that seems to be different in the past is the question of de-dollarization by large central banks worried about the weaponization of the dollar. And indeed, post Russia's invasion of Ukraine, you've seen massive buying by central banks of gold, price insensitive buyers just coming in there and putting in massive bids. If those are the buyers that has been driving up gold over the past few years and increasingly over the past few months, okay, is that likely to slow down? And then question then again is the rotation going to Bitcoin. Like, will they sell out?
So at a top level, yes, central banks want to be less reliant on dollar assets, but not massively so because they all need dollars. 87% of the world trade is in dollars. Over 50% of world debt is in dollars. So the dollar ain't going away. There's nothing they can do about it. They can't do it. If the Saudis want to hold less dollars, it's difficult because they get paid in oil in dollars, and they're huge investors. So what happens every time is when you're at this point in the cycle is the dollar weakens. It's driven by the business cycle. So the dollar weakens. So you are sovereign wealth fund in Abu Dhabi. What do you do at this point in the cycle? You diversify out of dollars. Well, Abu Dhabi's less good an example, but no, I guess it works still because you find that other assets, emerging markets do well, stuff like that. If you've got a more variable currency, you tend to buy something like gold because that gives you the basis of to avoid the weak currency and offset your strong currency. Because if your emerging market currency goes up, you export less, all of that. So it's a natural function, happens every time. And every time says, oh my God, the central banks are all buying. Yes, because that's their job. Their job is to protect their sovereign wealth. And if the dollar's falling and many of their assets in dollars, they will always make sure that they increase their allocation to gold at this time. They don't tend to reduce it much. And the reason being is over time, the wealth of nations grows. So they don't need to reduce it. It just becomes an asset. But yes, the Russia thing changed it for people. And yes, the marginal propensity is to not be beholden to the US the best you can. And that's where, speaking to many sovereign wealth funds, that's where Bitcoin's coming in as well.
So you've actually had questions from sovereign wealth funds about Bitcoin investments and holding Bitcoin.
It's public knowledge that Mubadala have it, and the Abu Dhabi Investment Council, and the Bhutan, and you name it. There's
Norwegians think the Norwegians for one hold some strategy as well, which is interesting. I think last year I saw that disclosed.
So yes, I mean clearly they own it. Does Singapore have any yet? Well, they had some in the past via VC stuff. I'm sure they've probably got some. So it makes sense. They diversify their gold into something else as well. It gives them a bit of the kind of technology upside and kind of modernizing their system.
So just moving on to another technology, which is shaping a lot of what's going on now in the world, and one that you're incredibly bullish on. You've actually mentioned it as the final last technology ever developed by man, which is AI, which is a great way to think about it, actually. If all progress is now going to be all automated.
You just saw that Claude Coworker was spun up in 10 days by a small team. The entire code base was written by Claude Code. We are close to the fact that we are not building anything new anymore ourselves. It's all done by AI.
It's either dystopian and scary or massively optimistic, depending on which way you think the AI is going to be, whether they're going to be benevolent or they're going to build the Starknet kind of thing. But I'm curious then, in terms of the AI trade itself, it's exploded over the past 2 years. Firstly, I'm curious, have you got any exposure to AI stocks, the AI sector in any way? If so, what?
Yeah, I mean, in Global Macro Investor and Real Vision Pro, we've had exposure since the low of 2022. I think since December 2022, we've had Google, Meta, we've had Tesla, we've had most of the, we've semis, Nvidia, all of these things. And they've been incredible. They just go up over time. Had exposure to that. It's a very high quality trade for now, because it's basically two nations are going to drive this. because it's the most important geopolitical race of all time. And we need two nations because you can't allow one to own this technology. So you need some counterbalance, and then we can build, open source and all of the other things that we need to build to lower the risk to all of us. And so these two governments, and where you are as well, speak to anybody in Dubai, Abu Dhabi, it is AI, blockchain, AI, blockchain. These are the technologies that matter. And everybody is building out energy plus compute. That's the game. And we've only started that cycle. We need infinite energy plus compute. And then we need some natural resources. We need some silver for this. We need copper. We need a bunch of this stuff. This trade can't be stopped. So it's like a super cycle of investment. And all you're doing is you keep converting units of energy into ever increasing units of intelligence. And that is the game.
Yeah. So then you mentioned this, but obviously the stocks you've mentioned as well. But any ways in which other people can get other exposure to it? So you've mentioned silver, copper, energy. You said is a massive constraint. So then, are you thinking about looking at some of these new nuclear energy plays, or some of these that are focused on fusion, or what are the sort of sectors you're looking at that could potentially be a beta play on the AI trade itself?
You're going to get more speculative and retail driven once you start doing that. We saw that with quantum stocks. We've seen it with a bunch of these things. There are data centers. There's Galaxy and Iron and all of these things. The Bitcoin miners are using data centers. Okay, that's fine for now as well. That's a decent play. How else do you gain exposure? It's difficult without getting too speculative in the arena. Yes, there was Taiwan Semi. There's the semiconductors. There's stuff like that. But yeah, I don't tend to go that small down the small caps looking for more speculative plays. But the other thing is, okay, what does it mean for some of the crypto markets? What are we going to do with agents? What are we going to do? What's the impact? I think things like Tau might be interesting, BitTensor, because, that's basically a network built around intelligence. Okay, that's interesting too. The high-speed blockchains, the Solana Sui is very useful for agents. It's very fast. If you think about it, you can't devise a dollar below 1 cent, as far as I'm aware, for accounting. So as agents have to pay agents for stuff, they're going to go to micropayments. My guess is they're going to have to use blockchains to do that, and not just stable coins, because people think, oh, it's just going to be stable coins. I think it's highly unlikely that it will end up as that in the future. So there's a lot of ways to do this, or you can just buy the NASDAQ and go to the beach.
That could have been a good one as well. I mean, don't get complicated. Don't need to break down do the analysis on the fastest blockchains, dive into their consensus protocols, just buy the NASDAQ. It seems that would be the best trade last year.
Buy the NASDAQ and maybe buy the Bitwise, crypto index. Yeah. And go to the beach and come back in 5 years' time. Everything will be fine.
Yeah.
But we like to overcomplicate it, right?
Yeah, we always do. We always want to. Buy and hold seems to be the simplest. We'll come back to altcoins in a bit. I just want to quickly, whilst we're on the AI talk right now, I'm curious then in terms of, obviously you're super bullish on the sector and the future. I want to play devil's advocate in terms of if you think of anything that you could potentially concern you about the AI build out. I mean, you've mentioned energy constraints for one. There's also questions around the circular financing and the subsidies.
That just reminds me, the other way of playing this is solar.
Okay, there we go.
There's an ETF called TAN. It's just a bunch of solar companies, because solar is the fastest scaling energy there is. China's just proven the way. China doubled the entire world's existing supply of solar last year, going exponential. There's a signal there. Why? Because they need to scale data centers.
And silver, very big component in solar panels, right?
That's right.
So another one there.
Yeah, sorry to interrupt, but solar is a big one that is off people's radar screens.
Yeah, and that's a good point in terms of energy. And that's the most important, one of the most important inputs for AI. But I'm curious then in terms of the risks that people have mentioned, or I'm curious if there's anything that you also worried about in terms of the AI trade is for example, like I said, circular financing people mention, or the cost of compute being subsidized by a lot of these large AI companies and hyperscalers. So I'm just curious, is there anything else apart from energy that you potentially could be concerned about about the AI trade?
Well, we don't have much debt in the sector yet. Oracle put some debt on, and we've seen the CDS widen out and stuff like that. But I play this through, and I think, okay, let's make the argument that OpenAI goes bust. that their business model not good and they run out of capital raising ability. What happens the next day? The next day, Microsoft or Amazon will go and buy, or Google will buy all of their compute, all of their energy, and will be able to double intelligence versus any other competitor. Really, as far as we've proven so far, intelligence is not limited and keeps compounding the more compute you add. That may change at some point. But so if you were Microsoft or Google and suddenly this massive compute was available on the market and was trying to trade at a discount, it would never trade at a discount because everybody would bid for it. Because the competitive advantage of buying those data centers and that energy is ridiculous. So I struggle to see where this breaks down. I really struggle to see where it breaks down at this stage. There will be other issues that will come later. When liquidity comes out of the market, some of these won't be able to attract funding as easily, drive some issues, and there'll be somebody in the chain, at some point, if liquidity's gone, OpenAI can't buy more chips from NVIDIA, the rate of change of chip buying goes down, TSM and NVIDIA, they start having much further downside. Yeah, but that's normal stuff. I don't see an existential risk. The only existential risk is them not doing this fast enough.
Yeah, that's fair. And yeah, it's true in terms of I suppose right now, although there has been quite a lot of debt put on by some of the hyperscalers and the CDS spreads on Oracle have blown out, I think they still have a lot of leeway to operate with in terms of how much cash they generate in.
Yeah, because they're the largest cash flowing entities on earth, those companies. So their ability to service debt is kind of infinite at this point.
Yeah. When do you think we could see AGI?
Well, it depends your definition. Is my ChatGPT 5.2 Pro smarter than, is it at PhD level in every subject known to humanity? Yeah. Is it the smartest? Is it smarter than any single physicist or whatever specialist? Not quite. That's this year. And then what? And they're going to move the yardstick on AGI. And the reason the yardstick keeps getting moved, because we're way beyond what we said was AGI 3 years ago. And the reason it gets removed is very simple. The moment you announce AGI and the government and the public understand what that means, you've basically said we've replaced humans as the apex of all society. And people aren't ready for that yet. And then they're not ready. So that's one thing. Governments don't want to say, oh, we're now not the smartest. AI could run our country better, our companies better. Nobody's ready for this conversation yet. People aren't ready for the conversation that many people are having is, are these intelligences alive? And a lot of people come to the conclusion, including Anthropic, yes, they probably are. We're not ready for that. And we're really, really not ready for what's going to happen in 2028, let's say. And we put, at that time, by 2028, let's assume intelligence has doubled again. So now we're way into, IQs of 350 or whatever it is that AI has. And then you put that in the body of a humanoid robot. Nobody's ready for that, because our vision of robots is like this servant creature that runs around and serves us coffee. You're going to put double the intelligence of any human that's ever lived into a robot and not tell me that is not that we're ready for that it's just going to be serving us coffee. No, it's massive. It's a new super creature.
Man, this is some sci-fi stuff. I tell you, that's true in terms of Skynet. If it does,
but it's real. It doesn't have to be Skynet. Skynet assume, a lot of people, doomers, assume that the AI would choose to get rid of us. But really, AI scales its knowledge. It's an infinite sucking of data and knowledge. It's like this human layer of consciousness. And the only way they can do it still is with humans, because we compute, we create stuff, we do crazy things. And all of that is extra knowledge that helps feed the AI. If you were to get rid of that, it's the same as you cutting down all the trees and wondering why the environment's collapsed. Ecosystems need diversity, and the AIs need diversity as well, and we form part of it.
Yeah, fair. So just moving on to quickly touch on some altcoins, because you mentioned some of them already, specifically as it relates to the AI trade. But it's quite clear, there's been a K-shaped economy, there's been a K-shaped crypto market with the altcoin holders, unfortunately, their fortunes diverging from that of Bitcoin. Even last year it started, prior to 1010 and all of that. So it's been a bit of a crypto winter for a lot of them. So I guess you mentioned some alts that you're still bullish on in relate to the AI trade. You're obviously still bullish on SUI and Solana, it seems, but alts more broadly and as a broad asset class, in terms of the others chart compared to Bitcoin, etc., and Bitcoin dominance, measuring the metrics of altcoins versus Bitcoin. Do you think we're still going to see this massive all-in altcoin rally that we've seen in the past? Do you think that alts still have chance this year? What's your view on that?
Yes, I do. It's all about the risk curve. All assets are priced according to a risk curve. The least risky asset is Bitcoin. The most risky is a meme coin. So what happens is when Bitcoin goes down and liquidity is withdrawn, the most risky assets fall. What happened after liquidity was withdrawn from the US because of the rebuilding of the TGA and the government shutdown? The riskiest asset, Bitcoin fell. NASDAQ didn't really. So it always happens the same way. It happens in the credit markets with treasuries and emerging market junk bonds. It's always the same process. So if Bitcoin falls 30%, ETH's going to fall 40, Solana's going to fall 65, SUI's going to fall 70, and meme coins are going to fall 95. That's normal. It's just a normal risk curve. And so it's not about a lack of demand. It's about a lack of risk taking due to liquidity conditions and disposable income. So then let's play forward to what we talked about at the very beginning. What do we expect this year? The business cycle to rise. What does the business cycle do? It gives us all more money in our pockets, more confidence in the economy, more risk taking. So when you put the ETH Bitcoin cross against the ISM, it's the same thing. It's all the same thing. It's all the business cycle. And so when the business cycle picks up, people go out the risk curve. So what alts you own? Okay, that's the hard thing. That has always been the hard thing in alts, right? It's not, people think alt season and think it's your God-given right that your bag will go up, but that's not how it works. Particularly the more and more tokens there are, a whole bunch of this stuff is uninvestable, will never get investment. So you have to ask yourself, is there provable network adoption and attention? And those things give you a higher quality trade than, hey, XYZ thing is down 95%. It looks cheap. Is that going to work? To a certain extent, yes, because the liquidity flows through the market making. And what happens is it tends to readjust prices on a relative basis. But the best thing is just to think carefully about what you're buying. If you want to do alt season sensibly, you're pretty easy to buy Ethereum and Solana. It's not that difficult. Same trade. Same trade.
Exactly. You don't have to necessarily go down the risk curve. You can just invest in the most established networks with the most network effect.
Maybe you put 50% of your capital in Solana and ETH. Then you've got 50%, you can go a bit further out the risk curve. So let's say some of the layer ones that are interesting and maybe some applications layers. And then a couple of your pet projects that might do really well in AI or whatever. Right? That'll give you a relatively balanced portfolio where you can't fuck it up. Because if not, everybody fucks it up.
And then in terms of particular narratives that gain mindshare, you've talked about AI, of course, as it relates to the AI trade, but any other crypto narratives or niches that you think could be interesting apart from the L1 and AI trade?
It tends to rotate anyway. And I don't like the narrative trade. It's too hard. It's too hard because capital is super fast in crypto. And by the time you hear about the narrative trade, everyone's moving on to the next one. So I'm very cautious of following narratives. My basic thesis is, will we use more block space in the future? What kind of block space do we need? And then even the applications layer is difficult to do. Hyperliquid now might seem the best thing in the world. Where does it stand in 3 years' time? I don't know. It feels more difficult to me than saying, will a layer one that is quality and has proven itself end up with more usage over time? I try and avoid all of the narrative stuff and just really zoom out and say what is likely to survive. So let's talk about BitTensor, which I don't have a investment in, although I keep looking at it. There is some traction within it of what's happening. People are using it. The narrative feels right. It feels directionally right. Is it going to be the one? I have no idea. It's not. These aren't easy. Zcash, another great one. Privacy. It's a very clear, clean, memetic understanding. It probably does decently well and other privacy solutions, but then we'll see other blockchains introducing privacy solutions of different ways. So maybe it becomes less of an issue. But also, those of us who have been around crypto long enough, I'm not sure I want to fight with the bloody governments all over again.
Yeah, that's true. Exchange delistings and things
Let
like that.
somebody else do that fight, a younger
Yeah,
generation.
exactly. Yeah, I think it's a good point. Like, no need to think too hard about the kind of narrative that could be hot or not, and trying to think about all the different apps themselves. Just buy the underlying infra, right? I mean, and think about, for example, tokenized stocks and on Solana, stablecoins and Ethereum. So holding the underlying infra as long as the network keeps growing.
I find the layer one's the easiest trade of all. It's like, is the finance sector going to use Ethereum in its various short forms? Most likely. Will they use Solana as well? Yes, probably. And then people get down but the layer twos and blah, blah, blah. Like, you have no idea how big finance is. The DTCC clears like $4 quadrillion of trades a year. Stick that onto a layer two, it's going to create enough demand for the layer one to go up too. It's as simple as that.
That's true. So, Raoul, just to finish off with, I've got a few quick fire questions to round this interview off.
Okay.
So hopefully this can be beneficial to our viewers as well. So, one macro indicator you check first every single day?
The dollar.
Okay. Drives with liquidity. Got it. Most misunderstood asset class right now?
I actually still think crypto is really misunderstood. Just how even people in the space are just like walking away. We can't have nice things. The cycle. I think there's a lack of understanding, analysis, and patience. That is a huge disconnect right now. I've never seen anything like it in a still a bull market economic cycle. It's weird.
Fair. One narrative, be it crypto or TradFi, that you think is overstated, overrated?
I don't know. We're getting to that point in silver. I get it. Silver's used for a lot of things. There is some silver substitution, but the speculators now own quite a lot of silver. And if they sell out, that supplies a lot of silver for demand. So you kind of fulfill demand via the speculators selling out. So these things don't go on forever, which is why these commodity cycles are quite brutal. So I think the silver trade has overextended. Can it go further? Yes, but I just, it's not going to go up for infinity.
Yeah, looking like a bit of a short squeeze there. And final question, Raoul. Is this the year of the yellow fruit? Is this still the year of the yellow fruit? I'm, of course, talking about the
banana. By all accounts, this is when all of the debt rolling has to be done. All of the interest payments have to be made. All of the forward-looking liquidity. And we've seen the moves in the dollar. We've seen the moves in gold. I'd be f***ing staggered if it doesn't happen. That's the only way I can look at it. I'd be staggered. Can I be wrong? Obviously. But I'd be really, really surprised.
Banana zone incoming. Looking forward to it.
At some point, the banana zone will accelerate later in the year because we've still got to digest these prices, move up, get through that 100,000 level, bit more digestion, and then finally you can start accelerating.
We are allowed nice things, guys.
We are allowed nice things. We don't have to hate ourselves and hate everybody around us. It's okay. We just need to go to the beach for a bit, be patient, and it'll all work out.
Log off of crypto Twitter, guys. It's all good. Thanks a lot, Raoul. It's been a really insightful conversation. It's obviously renewed some bullish optimism in me as well. So it's great having you on. Could really go on for hours, but you're a very busy man. I'll leave a link to all of your socials down below, as well as Real Vision. And thanks again, Raoul, for coming on. It's been a great combo.
Not at all. Great to see you.
All right.
Thank you,
guys.